It was FOMC day today, but not a lot happened in the market. The SPY was up 0.42%, closing at 561.15. The gamma exposure data is still pretty evenly distributed, both to the upside and the downside. With the SPY and the Qs, we've seen a close in negative gamma exposure territory the last couple of trading sessions, while SPX, on the other hand, has remained in positive gamma exposure territory for the past 2 weeks. This is a pretty big divergence that we've been highlighting for the last couple of days, while the S&P still has large gamma exposure concentrated at the 6,000 strike. So our philosophy has been, as long as we remain in positive gamma exposure territory on the S&P, we are going to continue buying the dip until we see that gamma exposure flip back into negative territory. Coming back over here to our SPY chart, we're looking at the daily candlesticks. We remain above the 50-day EMA, which is sitting at 556.47. This is also sitting right around our zero gamma exposure level as well. And so we're just hovering here, but I think this consolidation is relatively healthy after the big run-up we've had since the April 7th low. In terms of the gamma exposure structure, our upper dealer cluster zone is sitting between 580 and 585. Once this consolidation is complete, assuming support holds, we can see the next leg higher up into this 580 strike. This is our base case scenario for the month of May. However, we do continue to maintain hedges to the downside should we see a significant rejection off of these levels. And so for us, this is one of our favorite setups, adding long positions while hedging to the downside at major decision points in the market.
Anthony, taking a look at the VIX, we continue to see a somewhat tricky picture with uncertainty and possibilities in both directions. We are above the whole moving average, which is at 2173 currently. The VIX is currently at 2355. And with this distance between the whole and the current level of the VIX, we could easily see the VIX come down to test this line and potentially even dip below it to this large GEX cluster at 20. We did see relatively high volume at 20 compared to other strikes today, but the other possibility is that because we're above the hull and we have this long signal and, whatever other catalysts may happen out there, we could also see the VIX move toward 25, 30, or even as high as 42.5, which is the upper dealer cluster. I wanted to take a quick look at the 2-hour chart just to give us a slightly different look at what's happening on smaller time frames. As we look at the 2-hour chart, we can see that we saw rejection from the whole moving average on the 2-hour, and that leaves open the possibility that we do see the VIX drop down toward 21.5, which is pretty much right at that whole moving average line. So looking for potentially the VIX to pull back more, and that could imply that the market rallies in the short term.
Thanks, Sean. Next, let's take a look at the Qs trading at 483.32, sort of sitting in no man's land here between two major technical indicators. We've got the 20 period whole moving average at 490.34, and then we've also got the 50-day EMA sitting at 475.80. But looking at the gamma exposure structure, we've continued to see a shift higher in gamma exposure data as volume has been coming in between 480 and 500, and that is beginning to manifest here at these gamma exposure strikes. The two largest gamma exposure concentrations are at 485 and the 500 strike, suggesting that market participants believe there is further upside in the Qs coming in the next few weeks. The Qs have been flip-flopping from negative GEX to positive GEX territory, and you can see that here just trading right around the zero gamma exposure line. And that's similar to what we've seen on the SPY as well. As I mentioned earlier, the S&P has maintained consistently for 2 weeks in positive gamma exposure territory. So the Qs today closing again back in positive GEX, and the current structure does look like a buy the dip scenario is setting up. By the way, I just wanted to mention we just launched our daily live stream, so if you're interested in getting gamma exposure updates after the market opens, it's an easy way to see what we're looking at in our own community, as well as get some trade ideas for each trading session. I'll put a link in the description below for you guys to check that out.
Thanks, Anthony. Let's take a look at Best Buy. I think Best Buy looks like it might be due for a pullback here. I'm not saying it's best sell necessarily or that they need to change their name, but they are at this biggest upper GEX cluster at 68, and there's not a lot of interest in prices above that as far as GEX goes. There are some positive clusters that are at higher levels, but they're not as meaningful as the larger clusters at 62, 60, and especially at 55. And from a short-term perspective, what really caught my attention is the rejection of the whole moving average 3 days ago. They actually reported earnings on the 4th, so they just got through their earnings report. They're currently stuck below the whole moving average. And so I like the idea of a pullback in Best Buy from this 68 zone down to at least 62, maybe even a little lower than that. The way that I'm going to look at this is a close above the 69 area. I'll look at as a signal to get out of that trade. But with 69 as my stop, I like the idea that this falls several dollars a share.
Thanks, Sean. Next, let's take a look at Nvidia. Nvidia, big update today, up 3.1%, closing at 117.06. We've been mentioning in our last several videos this 115 and 120 large gamma exposure concentration, and we had a big move up today off of our zero gamma exposure level, as well as the 50 period EMA. The 50 period EMA is sitting at 113.23. So I think it's a pretty significant move that we saw this rally today towards this 120 strike. We actually did not take a trade in this. We were waiting for a little bit of a dip further down below this 110 level just to get a better risk reward setup. But this setup is still possible if we get any kind of consolidation here or slight retracement. We are going to look at this as a potential long entry. The 115 and 120 strikes are the most prominent, and we're starting to see gamma exposure grow all the way up to the 130 strike. So this is something that we are tracking for a potential bottoming play. This is going to require, of course, participation from the market overall. We need to see continuation of this bullish trend in the market in general, I think, in order to see this rounding out and relaunching here of Nvidia to the upside. But I do think it's possible, and it's something we're tracking very closely because these moves in Nvidia can be really sharp to the upside, and there's money to be made there if you structure your option strategies correctly. Another point I just wanted to make quickly is the volume today in the options market at this 120 strike. Well over 200,000 contracts trading at that 120 strike. Typically, when we see this kind of volume tied with this kind of gamma exposure, these make high probability targets, and that is something that we're going to continue watching and potentially trading, which, by the way, you can follow along by becoming a member. I'll put a link in the description below.
Let's take a look at U.S. Steel. Their ticker symbol is X, and the steel industry, as you are probably aware, has received a lot of attention from the current administration in the USA because of the desire to see more steel produced, in our country. So, there's kind of that macro factor that's out there. But I like, since January, it's been in a pretty solid uptrend, kind of bucking the trend of the market dropping. And so the fact that we saw this big red candle today almost brings price down to this big GEX cluster at 40. Overall, total GEX is positive, and I really like it when we see a positive GEX picture and we see progressively higher strikes as you look up the chain. The upper dealer cluster zone is currently at 45. We had relatively higher volume at 45 and at 50 today. Most of this GEX at 45 is clustered around May 16. There is some GEX at 50 for May 16, but most of that is June 20. So all, relatively short term within the next month or so. And I think this dip to 40 may be a great opportunity to buy a stock that's in an uptrend.
And if you guys want access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our community Discord, head on over to geeksoffinance.com. You can sign up and become a member. As a reminder, members get access to our premium channels in our Discord community. You can follow along with all the trades that we're making in our own portfolios, as well as from other traders in the community. It's a great resource. You definitely don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.